Hey there, good morning everybody. A very, very cold and leftover snow down here ridiculously in San Antonio, Texas. Tuesday morning, February 16th, 2021. Great to have y'all with me. We are cold. We are very cold. And some of y'all, again, some of y'all may be in other areas of the world where, it's your normal winter thing. But the idea of multiple inches of cumulative snow here in San Antonio and even south of us. Even some friends over there in Houston getting it. It's just absolutely stupid. Oh man, this weather is crazy. Anyway, yeah. So we're gonna try and keep this going today. We'll see. Our area, they've been having blackouts as they do in a couple of different areas throughout the state here. Quite a few actually, due to all the power on the Texas grid being under so much of a load because the wind turbines, the green energy, most of them are up in north and the panhandle of Texas, West Texas, and they're frozen over. We've got some out on the coast, but they aren't making up the difference very well. And so that'll I think it gives us about 30% of our local grid, of our Texas grid's energy. So we've got a decrease in energy coming in and a significant increase in consumption as everybody's trying to stay warm. And anyway, like I said, we'll try and hopefully nothing will happen during the stream and kick us off. So, oh, what a day to live in, man. Good to see y'all checking in here. Who's here already? Hank, what's going on? Chris Day's here. Tom's here. Let's see here. Deep Quantum Crypto. Good to see you there. Sorry, having a hard time with words today. Nevlusian, hello there. Alex Webb checking in. Data's here. Baker's here. Crypto Magli, good to see y'all. Tell you, Ryder, what's up, man? Tell you, Ryder's used to the cold, but it's a thing where he's from, not where we are at down here. We're really pretty far South Texas to be getting this kind of snow and ice and negative, degree weather and whatnot. We were in the single digits, but we had a wind chill like -10 or something. It's just stupid here. Hey there, Ari, good to see you. Crypto Girl checking in. Common Man is here, saying he's actually here at the start. Great to have you in there. Denny checking in. So, guys, we're going to go ahead and, you know what? Soy from Paris checking in from Dubai, a sunny Dubai. Man, must be nice. Must be nice, man. Bianca, new here? Good. I'm glad to have you checking in, of course. Let's see here. Common Man saying it was -1 in St. Louis and the wind chill made it feel like -20. Man, I can definitely understand that. I've got some friends who are just about an hour north of me right here, and they're really hating life right now. It just you're just not prepared for this kind of cold. It doesn't happen. This is I think this is the worst winter storm Texas has had in like 30 years. As a matter of fact, the peak energy demand is supposed to be an all-time high. The last time was summer of 2019. So a lot of craziness going on here. But anyway, hey guys, listen, if you haven't done it yet, join us at howtotradetowin.com. We'd love to have you all here. Tier 3 is the place to be. That's what's up, guys. That's what's up. We are finally getting automated with our able to get automated with our Discord access. That's been something we've been working on a while. Discord doesn't necessarily play well with everything else. So we needed to have a link here programmed in between our membership system on the website and Discord. But we've got that. That should be coming up here pretty quick. So exciting times. Listen, guys, if you are a member right now, do me a favor. Come in here, go into your My Account there. You've got your list here on the left side. At the very top, you'll notice a new link up there that says Update Discord Username. Click on that, put in your current Discord username, and you have to put it in the way it is. The same punctuation, the same spacing, whatever's in there, plus the number and your 4-digit number there that comes with, with your Discord username. You can get that by right-clicking on yourself over there in Discord and going to Show Profile. It'll show your username with a number symbol and the 4 numbers next to it. So you just need to put that all in there correctly, and that way we get that all up in the system. And that way you're just sure that when we go live with this thing, it doesn't boot you because there's no connection between your account and your Discord username. So Just go ahead and do that. I would appreciate it. Everybody else, come on, join in here. We'd love to have you with us. I'll tell you what, we are the place to be. I'll tell you that. Let me see here. Yeah, exactly, man. It's crazy how cold it is, and everything's going on here. Pipes freezing, and power going out, and it's been crazy. It's been crazy. New is that Tara Kirkland says new respect for Canadians. The air hurts my face. yeah, us too. Hey there, Portray. Good to see you. Excuse me. Yeah, don't even talk about snow tires here in Texas. It's not a thing. Snow in the Panhandle isn't a surprise. That usually happens. Lubbock, Amarillo, stuff like that. But they're at the bottom of those southern plains. So all that Canadian air comes straight on down into Texas, and that's what this is. And it just keeps on coming in. Florida, 65 degrees or something like that. I don't know. We could all hate Scott Milker right now. Let me see here. You sent me some of your weather there just in time. I don't appreciate it, man. Hey there, Alex T. Good to see you. Good to see you. All right, guys. So I'm going to start here with the DXY because I keep telling you this is what you need to watch. Stop listening to everybody else and their hopes and their dreams for whatever you're trading. This is going to be the dream killer if it continues up like it is. I've adjusted the count here. This mirrors the count that I've got on the Euro USD, which is an expanded flat, a flat going on here. So basically what we have here is we have 5 up for a 1. We have then ABC down for A, ABC up for B, 1, 2, 3, 4, 5 for C. Had this strong pop up this morning, and that took away Bitcoin hopes for the moment. Bitcoin popped out there about $50,060, I believe, until this happened. And of course that sent Bitcoin back down a bit. So my running assumption is that if this keeps pushing on up like it looks like it's going to do, then I don't know, how does Bitcoin go up? For right now, as far as the DXY goes here, we've got this breakout of this descending channel. Pattern target gives us, the pattern target here gives us 91.289. It's based on the height of this channel here on the breakout. We broke out, rejected the pivot, came back, tested resistance as support, trying to pop back up again now. And if we zoom this thing out to the daily, there you go, guys. We got a lot of room to run with this right here. We do have, as you can see here, we got these lower lows right here. And we've got higher or lower lows right there as well. So there's nothing divergent there on the daily. But the other big part about the daily here, not only do we have the bullish cross here down and oversold of Stochk RSI, but we've also got support here, basically. It looks like it's coming up support there on the pivot. Again, moves in sideways between the pivot, the R1, pops up the R1, comes back down, retest the pivot as support, move back up. That's what we're going to look for. The 4-hour does give you some bullish divergence here between waves 3 and 5. As you can see right here, pops back up. By the way, you'll also notice that there is this descending resistance here. And that just comes off that big pull we had down from March. So dip right back, resistance, do we get back above it? What we want to see, the first thing we need to see is the move above this pivot in wave 4 here. If we can get above that, that's the first clue that the bottom may be in. If we continue up above wave 2 here, which is 91.235, that's going to add confidence to our count here. Excuse me, so then we'll be looking for that, that further advance there. Let me see here. Get rid of that count. There we go. Make sure this is showing up. All right. So if this is correct right here, and this is a 1 with an expanded flat for a 2, or a flat there for a 2, that would give us a minimum wave 3 up here of, let's see here, around this 92.932 area. And so, yeah, that would give us 3. 5 would be a minimum here, 93.598. But that still doesn't get us above this wave 4 up here, which is what we really need. So until we're getting above this, again, this 94.651 area, price is still vulnerable to, you know, much more vulnerable to heading down than what it will be if we get above that. If we get above that, there's not a lot of reason I've been telling y'all to really kind of think about further downside for the dollar at that point. But right now we're sitting here and we'll see how this plays out. We'll see if we get it. We need follow through locally right here. Until it does that, you know, still possibly heading to the downside. If it does, I don't necessarily think we're going to go very far down. I think we'll probably just get like a bit of a lower low here before heading back up. If we look at this, you know, this could be an A, B, potentially C here maybe, because we did have a somewhat of a 5 count we could get out of this. So, you know, if that's the case, then this is potentially a 1 with a 2, and then you'll have a 3 and a 4 and a 5, and, you know, so you'll just get down here in the 88s maybe for that wave 5 to finish up on all that. But again, if it gets above this swing high up here, this first swing high at, you know, around 91.6 or so, then that starts building a case toward that bottom being in there. So that's kind of what we're looking at right now. Let me see here. LXT says USD against the yen is looking bullish. That is looking the most bullish for sure. You know, the Euro USD questionable, you know, along with these lines, you know, is it expanded flat or flat there going on? But the USD against the yen, you know, that's one of those ones we track multiple updates a day there, and that one just seems to continue to keep on pushing up. But that one is only, you know, again, the Euro USD makes up, you know, about 57% or so of the weighted basket that gives the DXY its value there. And the Euro, or the yen, the USD yen only makes up about 11%. So, you know, you want to see Euro USD really moving to get that. So that's what we're kind of looking at there. So what does that mean for Bitcoin? Well, then it leads to this right here. Bitcoin tried, and it gets up there. Like I said, this is Bitstamp here. It got up there around $50,602, not 60, $50,602. And then shoved right on back down. Now, for right now anyway, it is finding support here at this local range resistance there. But it is continued to print this, you know, this 1 hour bearish divergence here, which I think, yeah, same thing here on the 4 hour. And the 4 hour has a lot of room. You know, your 1 hour, you could argue, well, you know, we're getting down into oversold here. Maybe it might head up. But I don't know, man. You start looking at your 4 hour here, and your 4 hour has a lot more room. You know, RSI's in a downtrend. It's neutral right now at about 53.5. Stochh RSI, though, you know, it popped up here about neutral, and then it's rolled over now, crossing bearishly. So that might make you kind of lean to that side there. On the 4 hour and the 1 hour, you can see we've moved in between the pivot and the R1 pivot here. And so, again, usually with that, it's either up to the R1 and then come back to the pivot and then check the pivot as support and push up. Kind of like what I was talking about here with the DXY on the daily. Or it can move down here, check the pivot first, and then move up through the R1. But if from here, if it drops below that pivot, you're going to look at least to the S1, potentially to the S2. If it just from here, if it comes on down below the pivot there, most likely it's going to the S1. And then at that point, you know, we're kind of looking at that S2 level down there. Now, all I've done with this channel right here at the moment is I've kind of just put it here from the bottom here to the top. But, you know, we can run this as we had it previously, just like this here. And it kind of gives you this look. As far as, you know, just kind of find some major areas of support or resistance that run with it. What I told Discord was we're going to watch this red line right here. Zoom this back into the 1 hour. And we're getting pretty close to it here this morning. But this is this kind of support line here. And so if we're dropping below that, my thought is if we're dropping below that, then let me see here. Where are my targets here real quick? Let's see here. Then we're looking at 43,550 to 4,400. So basically, kind of, let me see if I can just draw this in here real quick. Let's see here. Yeah, basically from here to about, what I say, to 44,000. Basically kind of this area here. And what that does is that gets you right here around the swing low and this kind of activity here. Remember, there's a whole bunch of demand pent up in this area here from when we were moving this sideways. So you kind of want to watch that area there. I guess we can probably pop that up a little bit more. There we go. And as you can see, the first pull down back into it hit the EQ here and bounced up. Now that's a pretty deep push, a pretty deep dive in there already. So if we don't get the reversal out of that area, you notice that that EQ is almost at the center of this yellow box, this target area here. If it continues on through that, which it might again, because this was such a deep piercing already into that, so it got rid of a lot of demand that was sitting there. Then we'll look at, let me see here, 41,500 to 42,000, which again is basically this demand structure right here, which is the S1 pivot. You know, again, guys, everything else aside, if you're looking at pivots and you drop through the pivot, you look at the S1. You keep on going through the S1, you got a good chance of getting to the S2. So generally, I mean, that's where we're going to look, and it happens to align more or less with the targets as well. If we continue on through this area here, we're going to come on down here. We're going to look at about 36,800 to about 35,000. Let me see here. I had that backwards. Yeah, about 35,000 to 36,800 is that next kind of level. And that just gets you right here around the EQ of this large trading range here. This gets you right around this area here. So, you know, we'll look for the bounce here. If it continues going, we'll look for the bounce here. If it continues going, we'll look for it right here. And then, of course, if it continues down through there, you've got 33,800. So, I mean, this area right here, and then, of course, the S2 pivot right below it is that next target there as it continues coming down. That's the way I'm going to watch it. That's the way I'd be interested in playing it. If, however, price does happen to go over this morning's swing high up here, at that point, you're kind of looking to the 53,000. Let me see. Let me put this in here. Basically, 53,150 or so, which puts you right around the R1 pivot. And the secondary target being this 55,000. Let me make sure I got this right here. Yeah, the 55,100 target here, which is actually the daily R3 pivot. So if we zoom out to the daily here, that's that daily R3 pivot right here. So those the pivots are kind of aligning with the targets. So it just helps give them some confluence. But remember, again, on the daily, guys, here's the daily. This is the reality of what we're looking at here. We've got bearish divergence from back here beginning of January still playing out. We've got Stochh RSI attempting to drop out of overbought here in a downtrend since beginning of February here. So we've got to see what goes on right here. I mean, at this point, all these little dojis just kind of go sideways. Even though there's a slightly higher high there, the dojis themselves tell you that there's a pretty even battle between demand and supply. And what I mean by demand and supply, I mean market buying and market selling. Your aggressive traders, the ones who don't wait. These aren't the limit orders. Now, the one thing we can notice on this is that we do have this expanding kind of wedge going here. So we get a high, a low, a higher high, a lower low, a higher high. And so you're getting this is just volatility. And usually it sets up for a strong move, one way or the other. If it were to work out where this is like a wave 4 with this expansion here, if that was it, you'd be an A, B, C, D, and you'd have to get an E lower low before it broke out. But then you'd only have a breakout upward of wave 5. that this is going to work out as an inverted symmetrical triangle megaphone pattern right here. So it's just basically that right there. So yeah, but when you're seeing all these dojis and these higher highs and lower lows, giving this real spread here, that's volatility. And then price is getting ready. You know, it's the same way we look at it when price, when the volatility drops off and price, you know, consolidates. You expect a strong move out of it one way or the other on that. So that's kind of where I am with that. I'm just watching some levels there. There's a lot, man, you know, with all this overlap, whatever, there's multiple different counts. For most people, it's going to get them more confused than not, so it's easier just to watch the levels as it moves there. Let me see here. Hey there, Brian. Good to see you. Schleeper says, do you know of the ticker SOS? It's a Bitcoin mining company. I believe it's undervalued right now and has lots of potential. Well, I mean, it's only undervalued if Bitcoin's price is rising, right? I mean, if Bitcoin's price decides to do a 2018, you know, all of a sudden that doesn't look so good, right? Let me see here. We'll talk about my gold chart in a minute here. Let's see. We'll look at SOS here real quick. Let's see, SOS. Is this what you're talking about here? If this is the one you're talking about, let's see here. Moving up from the bottom here, we got 1, 2, 3, 4, 5. So a 1 or an A, B, C, 2 or a B. And then potentially 1, 2, 3, 4, 5 maybe to give you a 3 or a C. Coming off here. Let's see. The extension's good though. The extension's up there around 13.5. So it's right there around 3.0 or so. Almost exactly. Let's see here. And don't forget Tilray, man. Tilray killed some people. Remember when I say killed some people, but their dreams. Remember when Tilray first came out and it shot up into the stratosphere and then tanked to nothing. So be careful with Tilray. Let me see here. Oh, let me see. Let's kind of just throw this up here, see what kind of channel we got going on here. And you can see you got that breakout there right at the top of that channel kind of thing. Yeah, SOS Limited. This is SOS Limited, yeah. So, if this is 1, 2, working on a 3 and a 4 and a 5 here, then this should probably be the end of 3, I'm thinking here. We'd be looking for a pullback then. See, you can do a short pullback, 23.6, and that'll recheck this resistance to support. 38.2, I don't think is very good as far. I mean, it gets you right here at this previous resistance, but it only partially fills that gap. I'm not a big fan of that, so it could happen, but I'm not usually a big fan of that. I'd usually be looking for it to head down to the 50 there to fill in that gap. But, you know, we've broken out of this channel here, so it should just come back to the channel. So I'd be thinking of a wave 4 pullback to the channel and then pushing up a bit higher there. And so if that's the case, then if we get that pullback to basically this 23.6 kind of area, then you got a wave 5 target up here of right around 18.5 or so. But once that's done, I mean, that's 5 waves up at that point. And if that's 5 waves up, then you're already looking for a decline, a minimum decline usually right here around this $7.40. And to me, that would be a good place. Why would this be a good place here? Because if we look where this is actually going, again, it's this support resistance. Yeah, it's support right here, resistance right here, resistance right here. So, you know, you kind of make this move where you go, okay, we've got a 1, 2, And then you get a 3 maybe here, and a 40-year pullback there, and you get a 5. So that gives you 1 there, and then you get your 2 here, and then you'd be looking for 3 up on something like that. But that's only if that's it. If this is actually an ABC here, well, then you've got further downside still to go. Now, price does not have to bounce right here. If it doesn't bounce in this area, I'd kind of be looking at the 78.6. That gives you just a little bit of a poke here at the 437. But if it's going to pull back the way that Bitcoin pulls back, you know, I wouldn't be surprised to see 90% over here, all the way down to the high volume node right here. So I could see this coming all the way back down here like this, hitting that high volume node, that 90% area there, all this support, before potentially going up. But I'd look at it, you know, the other way first. You know, on the way down, I'm looking at that 61.8 to begin with. If we're not getting through that, probably 78.6. If we're not getting that, then the 90. If you start falling through that, then things get a little, you know, a little iffy on that. Sure, you've got until it drops down below the swing low here. Until that point, it's still potentially a 1 and a 2. But, man, once you get below that 90, you're still going down there. It significantly increases the odds you're going to head lower down here. So, yeah. So that's what I'd be looking at there. Let me see here. So, you know, if we're looking at that's what I'd be looking at. If we're pulling back here, though, I would get concerned if you're pulling back here and you go through this ascending resistance. I'd be a little bit concerned. See if you can get the bounce there at 890 or even 744. If you can't get the bounce there, it continues dropping down. You know, I'd start being a bit more concerned. But, you know, again, a wave 4 can pull back. It just shouldn't get into wave 1 here. So this is $4.77. You just don't want to see it get in there. If you're getting in there, the last thing you can hope for as a bull is that maybe you've got a leading diagonal, which can be a 5-3, 5-3, 5. But, you know, again, once you're getting back below that 1, you should start defaulting to, you know, to potentially it just being an ABC here and you're heading lower. If you're dropping down below this swing low right here, so if we do this 1, 2, 3 and then down, or 1, 2, 3, 4, 5 up here and then gets down below, I guess the 5 isn't so bad. But if from this high here, if we're dropping below this swing low right here at 121, this is an ABC then. So that's just where you've got to watch as it's coming down there. You know, you expect the bounce off the resistance. If not, give it the 38.2 or the 50. If you continue down through there, start being cautious about further upside. But you're still good as long as you're above 477 here. Drop down below that. I think at that point you start looking at this as an ABC and really start looking at it probably getting to a lower low on that. Let me see here. So that'll get you that right there as far as SOS goes on that. And it'll be pretty much similar with any of those, you know, Riot and all the other ones out there, guys, that are Marathon Patent and whatever that are closely linked to Bitcoin's price. You know, because they're going to pretty much, I mean, it's still a different market. It's still stock market. So there's still going to be some, you know, it's not going to follow exactly. But, you know, if you're getting strong pullbacks in Bitcoin, you're going to get strong pullbacks, and you should get strong pullbacks in these companies as well. You know, anything really strongly Bitcoin related, mining, stuff like that. Or GBTC, which is, you know, Grayscale Bitcoin Investment Trust there, which tracks the price of Bitcoin because, you know, it just holds Bitcoin there. So, yeah, don't think that if Bitcoin's pulling back strongly, these things are just going to keep on going up. They're not. It doesn't matter what the rest of the stock market's doing. They should, you know, they're strongly influenced by what Bitcoin is doing because that's what they are, basically. Let me see here. Excuse me. Basically, price rejected at the 15-minute R2 pivot. We're still above the 15-minute pivot right now, so things aren't, you know, completely terrible. But if you drop below that pivot, you know, but the 15-minute pivots will close at the end of the day here in another 7 hours or so. So, you know, you just want to see this price get below the pivots wherever they happen to be. You might want to zoom out here to the 1 hour pivot. It's probably a better shot there. Again, it's the idea that if it drops below the pivot, then it starts opening up that further downside. A lot of overlap here, a lot of inching up. You know, it's easy to say maybe this is a ending diagonal here of some sort. One of the things I talked to Discord about last night, you know, I talked about the fact that this right here, that we had this going on and this here. This is, let me see here. Yeah, this. So it gives you kind of like this ascending wedge here. And in something like that, you know, basically you look at it potentially being a wave 5 and ending diagonal. And, you know, I think there's maybe something to that here because we have this move out. And usually if you have an ending diagonal like this, you'll have a kick out of it at the end, which will get instantly sent back down real strong like we've got here. And that's just, you know, it just throws it back in there. And so, you know, as far as if this actually is, you know, the ascending kind of wedge that we might look for at the end of a movement, you know, even just a local movement here, you know, you might expect something like that coming back in. You know, again, you push up above it, and then you instantly get sat back down and you trap all those late longers, those breakout traders who are trying to trade that breakout. And you trap them instantly. And then as they start covering their positions or getting out of their positions or getting liquidated, you know, that just gives supply more pressure, downward pressure on price. But then we need it to drop down below this, you know, this, right now it's right around 46.8, what is that, right around 46.850 or so. It needs to get down below that, this ascending support, to really kind of say that. So that was, you know, last night, that was more of what I was really kind of looking at. But I did mention to them that I could see the possibility of a running triangle here. But running triangles are really rare. And so when I come across patterns that are really rare, I usually try and see if it could be something else instead. If this is a running triangle, though, let me see. I think we got a A, then B, then C, then D, and then E there. So you've got this, and we call it a running triangle because wave B advances above where wave A began. So wave A begins here, ends here. Wave B goes up above where it starts. Wave C on the pullback, wave D, and wave E. This is possible. It's valid as long as price remains above wave E here. So if price happens to drop below $47,036.02 here, if price drops below that, then that, you know, to me that invalidates. I mean, you could probably say, okay, well, look, it was just a little bit move up here. You're above the swing high. Maybe you got 1, 2, 3, 4, 5 or something there. Very tiny little wave 5. I don't know that I buy that. I don't really like that so much. But maybe, right? But its pattern target is that one up here around the R1 pivot. But if this drops down below wave E, then if you believe this is a triangle here, then this is wave 5 and it's done. But again, that kind of, you know, that doesn't do anything really different than, you know, what we're talking about here with this possible wedge. Same idea. You know, again, you've got this wedge here, fifth wave, pop up and through and immediately sent back down. Right now, it looks like we have a 1, 2, 3, 4, potentially 5 printing out. If we're getting 5 down, we'll get 3 up. We'll get at least 5 down more. So at least an ABC locally, or potentially a 1, 2, 3, 4, 5 of an A or something like that. So that's what we're watching right here as this continues to set up here. I mean, those to me are I think those are the two ways to kind of look at this local area here. You know, it's this ascending wedge or potentially this running triangle. But again, as far as the running triangle goes, it's pretty rare. And so I usually don't default to it as the pattern that's playing out. Doesn't mean it can't be, but it just means because it's so rare, you should be more skeptical. until it does kind of prove itself, plays itself out. So yeah, let's see here. Trying to catch up with you guys here. Jeff, what's going on? He says really nervous about the S&P 500 put call ratio and the total GDP is in extreme levels in crypto or speculative positions. Thinking crypto will be sold first. Investment policies. Yeah. I mean, that's the same thing I've talked about. Yeah. I don't see anything wrong with what you're saying there at all. It's exactly what you would expect. When companies, when risk-off environments come about, companies remove the riskiest assets, the riskiest allocations usually from their portfolio first. And for most of them, Bitcoin's probably going to be, if they're in Bitcoin will be the most, the riskiest that they have. And so, again, they're going to lighten their load in that. I know a lot of people are being promised all these great things with Bitcoin, by the large accounts online and whatever. And, again, guys, like I've said, I hope it does. We'll make a ton of money if it does. But the problem is everybody's following these people. And by the way, these large people that you guys are jumping on, I haven't found, I'm trying to think here. I haven't found any of them that really even have a graduate economics degree or anything like that. They're just people talking emotionally. And if I look at them, many of them, most of them, their companies or their products are tied to Bitcoin doing well. So, you need to cheer it on. It's your livelihood. It's your product, right? I mean, it's your business model, right? If Bitcoin's doing well, the business that you have that's, with it, should, is going to do well. And if Bitcoin's not doing so well, then your product is probably going to fall to the wayside, right? But, most traders, most retail traders, unfortunately, on crypto Twitter aren't really paying much attention to that. And when you try to bring it up, they get very emotional, very defensive. Because internally, it's this all, well, I don't really know what I'm doing to the market, so I need the market to go up. And so anything you say that might threaten that, instantly becomes, forces them to be, defensive real quick. Because, again, what the alternative is, they lose money and they don't know what they're doing. This is why, I understand the plight of the retail investor, but at the same time, again, I used to make these analogies all the time, but you don't just jump into a car and try to drive 150 miles an hour if you don't know how to drive a car, right? I mean, but that's what people are doing when they're jumping into the market because the crypto market especially is so accessible to anyone, You don't have to have a certain bit of wealth. You don't have to have any kind of real education. You don't have to have, if you do DEXs and whatnot, you really don't have to have a minimum age or anything like that. So it's easily accessible. So people think it's kind of like politics and religion. People think that they are able to have an idea, that their idea, that they can do it successfully. But, again, it's not the case, guys. You got to learn how to trade. You have to be aware of what's going on. And that doesn't make you a bear to be aware of what's going on. If that bothers you to be a bear or to be called a bear. But it does mean that at least you're being smart about your money. Otherwise, your entry into the market is basically taking a scratch-off ticket and scratching it. Why would you do that? Go buy your scratch-off tickets. I mean, they're likely to give you more enjoyment. This will keep you up at nights, stretch you out, make you trade emotionally, make you lose money that you don't have to lose. So, yeah. So anyway, just kind of looking at that there, there are some possibilities with what the price action says here. Overall, the move is still up. Overall, if you zoom on out, it's definitely there. But again, we've been talking about this range here and the fact that this is potentially still wave B here and looking for that pullback into this area. And then it becomes a, do we at least get a check of the resistance as support? Or do we pull back further in here where we can get a last point of support down here, which would, again, come down around, the EQ of the range to just below that here, probably around the pivot area here. Take you back into this area. So, again, it just gets you basically, you have this right here would basically be kind of like a minor show of strength here. Pulls back in, you get a last point of support down in this area, and then it continues up if this is reaccumulation. The other possibility is this comes on down here and drops below, maybe to the S1 pivot here at 26.5, 26.6. And you get this slightly lower low here, and that becomes a spring, and then it goes back up. In which case, this would be a 3, and this would be a 4, and then you'd have your 5 coming up. 3 and 4 of this larger movement. But, if you're continuing down through that S1 and continuing, further and further down here, then, then you can question if, okay, maybe this top is in here. Another way that we're going to look at this is if price comes down into, either the resistance here or further into it, I want to see what kind of candle spreads are we getting, how large are these candle bodies going to be, and how much is that volume going to ramp up. That's what I want to see if it's coming down here. And that'll help us understand a little bit better whether this is potentially distribution or reaccumulation in this area. Right now, there's no way to know for sure. Right now, it's looking potentially reaccumulative. But, again, that can change in an instant on this move down, depending on what kind of price action and volume profile we get out of that. So there's nothing written in stone here, contrary to what people may want you to believe, guys. In terms of pivots, I've talked about this often. Your main pivot area is your S2 to your R2. If you're getting above the R2, like you're closing and continuing above that R2, then that usually means you'll run it up through the R5. If you get rejected around this R2, which right now, even though we're getting these little wicks up into it, overall, we're still closing below that R2. If we're getting rejected or coming back, that increases the odds that maybe we're going to head on down below the pivot. So that's what you want to watch, this R2 to S2 area. You need a breakdown of the S2 or a breakout of the R2 to kind of really get, bearish on the downside or bullish on the upside. When you're playing with just traditional pivots, your S2 to your R2 is your main area. Breaking out above it should have you feeling pretty bullish. Breaking down below it should have you feeling pretty bearish. This is the daily. You can do the same thing with the 4 hour right here, the 1 hour, all those. Kind of get you in closer there to figure out what you may be doing on the bigger picture. But anybody that's promising you price is going to go up or going to go down is not doing you any favors, guys. Nobody knows. Don't believe anybody that says they do. I go through great lengths here to explain why I see things the way I do. But even with that, I still say, but listen, until we get this, this, and that, there's still, price is still vulnerable to doing this other thing. Because I've been doing this too long. I'm not stupid. You're not going to get guarantees out of the markets, guys. Markets are pure speculation. There are no guarantees. Always risk involved. Stop listening to people who guarantee you that price is going to do one thing or the other. Just understand what the possibilities are, the real possibilities, not the emotional possibilities. Stay away from the emotion, guys. That's not going to help you out at all in the markets. But pay attention to the rest of that there and, see what's going on here. I mean, there's so much possibility in this. Again, I'm hoping it goes well high, hundreds of thousands of dollars. It'd be fantastic. But if it doesn't, you don't want to be caught holding it if you've got some large extended correction. I mean, think of it this way. What if you held, let's say, what if you bought there at the highs of 2017 and you held all the way till now? And then it goes and it does the same or similar thing. And then so for the next couple of years, again, you're in this decline again. And you're still holding. You don't want to be doing that. You want to be able to realize profits. Until you actually lock in those profits, guys, they're unrealized. They're not real. They're potentials. But if you don't lock them in, it doesn't do you any good. What will Bitcoin Cash do? It'll do the same thing that all the other alts do. If Bitcoin's going up, it'll continue to rise. If Bitcoin goes down, it'll crap to bed with everything else. There's nothing special about Bitcoin Cash. I don't believe there is. It's just another alt, guys. And, contrary to what people are going to want you to believe, I don't think there's much in the way of fundamentals of individual alts that mean much of anything. Because that company can be looking great and doing all great things, but the minute Bitcoin tanks, they're going down with it. Really tanks, like, full on reversal. They're all going down. It doesn't matter how good they're doing. So the only fundamental that really matters is whether Bitcoin is pumping or not. If the individual crypto fundamentals really mattered, then either all companies that are in the alt space are just trash. Because again, if Bitcoin tanks, they're pretty much all coming down with it. You always get one or two that don't. Again, during 2018, when Bitcoin was coming down, BNB was going up, right? Binance Coin. During 2019, I believe it was, as Bitcoin was coming down, Link was going up, right? So there's always something in there that's going to go against. Not everything goes down all the time, but in general, they're going to go down. And so if individual company fundamentals meant anything, then Bitcoin shouldn't have that big a drag on the rest of them, on the alts. But it does. So again, either they're all trash or their fundamentals don't really mean much of anything. And I've got some friends here in the space, guys, who believe that the fundamentals are worth a lot. And that's okay. They believe that. Again, I have a hard time reconciling that the fundamentals of the individual companies do have anything to do with it, again, because of the fact that everything just goes to hell in a handbasket when Bitcoin actually reverses. And if Bitcoin's pumping, then they pump, Now, maybe your fundamentals from the basis that maybe okay. If people believe the fundamentals matter and they go buy it up more than something else, then to that extent the fundamentals may matter. But still, that only happens when Bitcoin's moving up. If Bitcoin's moving down, people don't buy like that. So, that's kind of how I look at it there with all that. So I just want to warn you out there, if you're getting into alts because, somebody said fundamentals and you look, man, that looks like a great project, or look at that team, or it looks great. Guys, it's all reminiscent of the ICO craze in 2017. It was the same thing people used to justify their buying these things that they probably shouldn't have been buying. And then a lot of people ended up stuck with them because they believed in the project so much. It just is what it is, guys. This is all still really new. I know it's only been around 10, 11 years, guys. So, cryptocurrencies in general, blockchain tech in general, whatever, is still pretty new. And if things are really that new, fundamentals don't have a whole lot to do with it. If it continues to expand and to grow, then eventually the fundamentals will matter. But when a market is new, when a market is purely speculative, which is what the cryptocurrencies are, then the fundamentals only matter as much as they encourage people to buy. But then, as I said, when Bitcoin drops, everybody gets out of them, so there's no real staying power to it. It's a lie people tell themselves, I think, to kind of justify their entry into the project. So just be careful, guys. Even if you're on the fundamentals, don't be afraid to take profits at some point, okay? After all, if you're not going to take profits when you have profits, when are you going to take them? And nobody ever lost money taking profits, guys, right? Nobody ever went broke taking profits. So yeah. But anyway, that doesn't mean you can't trade them, guys. It just means be honest with yourself when you're trading alts, that you understand why you're trading them or why they're doing what they're doing. What really kind of things should you be watching there. Because otherwise, like I said, you're going to ignore what Bitcoin's doing thinking, oh man, the project's so great, it's going to keep on going up anyway. And then you'll miss your opportunity to cash in on all the hard work that you've done already in trading it, right? So Bitcoin looking a little weak right now, larger time frames. Here's my gold chart, guys. For those of you that don't know, this is my big gold cycle, the way I'm kind of looking at things. I've pretty much had this from about 2015 to 2016, around this area. The only thing, you know, with the target here, the only thing I really changed was, at first I was looking at this as a 5 down here. So basically a 1, 2, 3, 4, 5 for an A, and then an A, B, C up for a B, and then down. But it was supposed to end, you know, in that case, it would have ended prior to this swing high up here, this all-time high in 2011. Since we went above it, I just had to change the count a little bit, which this becomes then a WXY. So, you know, 3 waves down for A gives us a WXYXZ up here, which is just, you know, complex wave B correction. This move up gives us this flat, so we should look for move down. Right now, I've got a 1 and a 2. Now, if we look at this 1, 2, this means we should, and you see prices falling through the weekly pivot here right now. So wave 3 has a minimum target here of 14.38. Wave 5 has a minimum target of 13.15 and 70 cents, which puts it right here on the high volume node. Makes sense, where you usually look for it to go. So if we do that, and then we look for wave B to move up from that. So let's kind of move this over here a little bit. So you get this move down here. And then let me pull this back up here. And these are minimum targets, by the way. They can change there. So you get your, so this would be 1, 2, 3, 4, 5 for A. So then A, B, C for B up here to the 38.2 right here at 16.12. So that's where I would see wave B. And wave C would then actually be projected to head on right down here, right at the EQ of this demand structure here, at about $843. So, I mean, the confluence in that is pretty significant. Now, we have to make sure that price actually follows down in such a manner. But again, basically, you're looking at something like a, 1, 2, 3, 4, 5 gives you wave A. And then you're basically looking at, A, B, C for wave B, which gets you around wave 4, which is where you'd expect it to be. And then you look at, your 1, 2, however you get through this here, 3, 4, 5 kind of thing, getting you down here. And so at this point then, wave C here is going to equal wave A. It's 100% right there around that 843, which is generally what we look for first with the ABC zigzag correction there. But this shouldn't be ABC here, though, should it? Not unless this is a W, this is an X, and this is a Y. Which with all this movement, it could be. This could be a W. So WXY is a W, WXYXZ as an X, and then A, B, or WXY right here as a Y. That could be. Otherwise, you've just got to get... otherwise, you've got to get your 5 down here. And so in that case, you'll have some overlap here getting 5 down toward this area. So, if it comes down as an ABC like that, then we would assume instead of an ABC here, it's a WXY. If we can get it down in 5 waves to this area, then the ABC works fine. But it's a big, a lot of years here, a lot of information. We assume an ABC, but with all the different, as you can see here, all the overlapping and everything, it's quite possible it could be a WXY coming down there. So, in either case, that's kind of where I'm sitting there with that. So we'll see how it plays out. Right now, I think the thing to pay attention to right now, if you want to not even pay attention to all that, is we're dropping below the pivot, the weekly pivot. The swing low is right here at about 17.67 and 20 cents. So if you're dropping below that, I think you're looking at least at the S1 here. So you should be at least looking down here around 1534. If you lose this wave, this swing low right here, I guess wave B, right around 1446, I think that kind of seals the deal and says it's headed down. But you can at least look down here, at the S2 pivot, 1173, as long as it's still there in that case. This moves down there. Let me see there. Hey, what's going on, Giulio? Says, do you rely on the total market cap to check the alts trend? It looks bullish, but still tighten up the stop loss on alts. I don't particularly pay a whole lot of attention to it. Recently, for Tier 3, we just added last week the crypto indexes. So, alt perp, exchange perp, DeFi perp, ship perp, all in FTX there, and the mid perp. We added those last week, and so we'll be updating those twice a week. So on Fridays and probably Tuesdays. So I'll have to update that later today. I think we're going to add in the total market cap. I think probably in another week or two. So we'll add that to the indexes there, the crypto indexes. If you guys, so that way, if you guys do use that as some kind of metric in Tier 3, you'll have that information there as well, what I'm kind of looking at with it. But me personally, I don't really spend a whole lot of time working on that, looking at that a whole lot. Let me see here. Let me see here. Let's see here. So there's gold there. Oh, let's go ahead and jump in here real quick at the stock market, kind of see what's going on there. Let's see. S&P E-minis, one of my favorites here because they're tradable in there. So huge fall off of what we have here. Looks like we got a 1, 2, 3, 4, 5 up here. So potentially done. Looks like a 1, 2, 3, maybe a 4, maybe a 5 a little bit further down here to get us 5 down, and then 3 up, and then we'll have another 5 down. So what do we want to look in here? Well, if this is the top, I mean, right now, I've actually got this, pull this right over here correctly now that the screen's caught up on it here. But coming off this wave 2 to wave 4, so this is this wave 2 channel here that we use with Elliott Wave. You pull it from wave 2 to wave 4. Let me see here, and we got to pull that up there to wave 3, right there. And they usually gives you the wave 5 target at the top or at the EQ there. So here we are at the EQ, which, by the way, you don't have to do it off wave 3. You can do it off of wave 1, and as you can see, that is the EQ there. So it's just a move up there. So, I mean, as far as that goes, some good confluence there with this being a wave 5. But what we want to see first is, this is only the 1 hour, so we want to see a decline through the pivot here and this wave 4 swing low at 38.90 and 25 cents. If we do that, if it gets below that, that's the first clue that the top may actually be in. We want to see this continue down further here. Really, we want to see it get it below this larger wave 4 down here. But along the way, this wave 2, if we get below this wave 2 right here at 37.17 and 25 cents, that says this is complete here. And so we should see it heading lower. Again, getting below. If we're getting below this wave 4, it starts looking really, really good that this is the top here. That this is probably the top of the stock market here. But we got to, so we got a ways to go there. So we'll still have to look at that. Watch it to make sure that it does get through those things. If we look at the NASDAQ, which is, as you know, very tech heavy, basically hit our target this morning up here at right around the R1 pivot. It's pulling off pretty good at the moment, finding some support on the pivot. But as you can see on the 1 hour time frame here, by the way, we've got this large, for almost a month now, we've got this bearish divergence on the 1 hour building. And Stochk RSI and RSI both, above their oversold area. So definitely scope for price to fall further. Again, same idea as what we were looking at on the S&P minis there. You want price to get below the pivot and the wave 4 low here at 13,531.93 cents. If we can get below that, that's your first clue that this top may actually be in. But from there, you definitely want to see it get below wave 4 down here. This is that larger wave 4 at about 12,845. If you're getting below that, I think you've made a really good case for the top potentially being in. And we're talking about big top. We're talking about 5 of 5 of 5 of 5 of 5, grand super cycle top kind of being in potentially. And then, of course, we look at the Dow Jones, which, unlike the NASDAQ, which is really tech heavy, and even the S&P is pretty tech heavy, Dow Jones is more of your broad-based index, so not quite like that. And right now, I'm looking at potentially a triangle. So A, B, C, D, E. Right here, I think we've got a 1, 2, 3, 4. I think we'll have a 5 up. The pattern target, based on the height of the triangle there, would get us 31,670. So we may still see that reaching up there to do that. Right now, it's still finding support around this wave 2 channel here. So we'll see if we can get that a little bit further up, and then we'll see if we get a rollover and a large move down. But again, you're going to want to see a drop below the pivot and the local wave 4 low there, which is 31,347.80 cents. But really kicks in when you're getting below this wave 4 over here at 29,856.30 cents. So your first clue is getting below the pivot here and the wave 4 termination point here. And then here, you can even look again toward the wave 2 of that a little bit earlier, 30,207. Once you're getting down below this one here at 29,856, that's where you really start feeling like, okay, this may be, 5 of 5 of 5 of 5 of 5 of 5 kind of thing going up there. Till that happens, still vulnerable to movement up, and you just have to readjust the count. Again, same idea here with the 1 hour bearish divergence through February here. So we'll see how that continues to play out there, but it's making some argument that it may be nearing the top or at the top kind of area right now. Let me see here. Crypto Magli's talking about a 233-year cycle. I'm talking about the cycle since this most recent top here would be the cycle since about 1929 or so, right there prior to the Great Depression, the market highs there. Remember, guys, that one, for those of you that have never actually looked at the chart, let me show you something. This is the cycle I'm looking at here in green. And if you've never actually looked at the chart, guys, so over here, the stock market hits like $384, right? $358, something like that, right? And it drops all the way down here to $40. So you're talking about $386 down to $40.50, $40.50. And that takes a period of time of, I don't have that up there. I have to grab it from over here. That gives us this period of time of about 1,065 days. So basically you're looking from August of 29 to about July of 32. All right? So there's your first big thing. It takes a while to get on down there, right? However, it then takes... How much further? It then takes just about 9,223 days to just reach that all-time high again. So that's from August of 29, where it was the all-time high previously, to basically November of 54. 25 years, quarter of a century, just to get back up to that point. So, I mean, if I'm correct in what I'm thinking about where we are in terms of these cycles, this is not going to be a walk in the park. That's why I keep saying this is going to be similar a lot to what we had here. And people say, oh, well, with the Fed, back then we were on we were pegged to gold, and we got off that in the 70s there, and this buffer. And so, it's not going to be as bad. It's going to be different this time. I don't know. I think that only works if you believe the Fed actually can control the market in any way. And I don't believe they can. I believe it's it's the same way of people going, oh, well, the news is what made the stock market do this, or that. But, we often project it ahead of time, based on Elliott Wave. And so if you can do that, then it must not be because of the news. The news can be a part of it, sure, but something was liable to happen in that area because, you had already projected that that's where it's going to be. And so if that's the case, then, especially when we're talking about money, then the Fed really doesn't have any control over the markets. Nothing other than short-term, very knee-jerk kind of reactions. But in general, the market's going to generally do what it needs to do. And what the market generally needs to do when it comes to money is purge. And when it comes to credit, is purge. You have to remove the excess that's in the market. When you have government distorting risk by artificially holding down interest rates and QE and stuff like that, you're distorting risk. That means money that should be going into companies that are producing value ends up going into companies that don't do anything, zombie companies. It's wasted money. And so when you get those excesses of waste over a 90-somewhat year period here, which, okay, so since the 70s, maybe 50-year period here, right? You've got to purge it. It can't continue going on, blowing up on itself from that. And so, that purge is what you get in here. But, again, we had this here, but we didn't have again, you're tied to the dollar here. Of course, this is the beginning of, fractional reserve banking and everything over here. Was it I can't remember right now, 1915? Was that it? The central bank came to be? So right about in this area right here. And so, you've got that, which leads this and boom back down. But now you've got this huge bit of credit here. This is all, again, guys, I've shown you the charts where we can just see how astronomically credit has risen since the 70s. And credit is the creation of dollars. When your level of credit is declining, is contracting, it's a destruction of dollars. And that happens when people pay off loans. And so, there's a lot of waste in there, a lot of excess because of what the Fed's jumped in and done and whatever, that the market is just generally going to choke itself out with and just decide no more, and then it'll have to pull back until it finds that equilibrium that it needs, and I think that's kind of where we're at. And again, if the market's dropping like that, the problem with that is, especially recently with the company, with the government propping up these companies via QE, these zombie companies, is a lot of companies go out of business. And companies go out of business, which means they're going to default, which means there's a lot of, going to be foreclosures and bankruptcies and stuff like that. That's going to lead to people losing jobs. And so the jobless rate, which is already still pretty high right now, is just going to be exacerbated. It's going to get up higher there. People without jobs need money, right? So, all of a sudden you got to figure out, how do you get this money in there? And if the economy's going off a cliff like that, people are not just going to spend money freely. The government says, here's, $2,000 a month for you. Well, they're not just going to go blow out and, buy Cheetos, or whatever. they're going to be more careful with it. Most people, because they're going to be concerned about, not knowing how long this is going to last with the market. How long is it going to the economy going to continue to drop? How much worse is it going to get? Which is just going to encourage saving if they can save anything. If people can afford to pay down debt, they're going to pay it down even more. Again, destruction of dollar. You guys are all so worried about this inflation that's not really hitting hitting anything other than really asset markets, energy prices, stuff like that. But yet you don't understand how dollars are destroyed and how it happens. I mean, again, during last year, we had a significant rate of people paying down their loans on top of not pulling out new ones. So, it's kind of hard to argue that you're going to have this big inflationary pop that everybody, in crypto Twitter is looking for if the dollars aren't inflating and spreading around the economy. If people are, even if they're inflating, if people are taking them, sticking them in the bank where they're not being used or using them to pay down, here's the thing, guys. A lot of money is moving around. It's going and sitting in banks. So it's not, circulating in the economy, which means no effect really. Inflationary effect. Remember, you talk about inflation, more dollars cause cheaper prices. Well, that's only if people are using those dollars to compete to buy those things. If people are taking those dollars and putting them in the bank, then they're not competing to buy those things. So how is price going to change on that? How's price going to get higher, right? But the other thing is, a lot of this money, people are taking and spending and paying off their bills or, paying off their loans, their credit. Destruction of dollars. So, the bank goes out and makes a loan for $1,000. So now the bank's created now $1,000. But then that $1,000 goes out and pays down, $1,000 worth of debt, $1,000 worth of credit. Well, guess what? It doesn't matter that they printed that $1,000 extra dollars because that $1,000 just went in and got destroyed again by paying off that credit. So there's a zero sum on that. So, that's a lot of what we're dealing with right now and potentially what we'll be dealing with coming up. Let's see here. Lewis Winthorpe III said, I think I'd be concerned about consequences such as World War III if a correction of that magnitude happened in world markets. Well, that's always the possibility. When you have centralized governments, you take advantage of crises. And it's definitely a possibility. I don't know if it necessarily has to be World War III, but, you might see more war breaking out, sure. If you think about it, in one way or another, the U.S. has been involved in war for decades and decades and decades, it's just part of the centralization of power. You'll see people who say, oh, well, because of war, we were able to lift ourselves up out of depression or whatever because of all the production that went to tanks and planes and all this stuff. But, there's the broken window fallacy. And it says basically that if you throw for all intents and purposes, if you throw a rock through a window and it breaks, you're not bettering the economy by having to then replace that window. You say, oh, but we're putting people to work. They're creating a new window, installing the window right now, right? But all you're doing is diverting money from something that was more productive to something that, should not have happened. So if your answer to a depressive economy is to go to war, again, all you're doing is directing money from what you should have been doing, putting it toward, to fixing that window. Basically, you're wasting money. It's not creating anything better. But the economy ends up eventually working itself out of the rut, and then people claim, oh, it was because of all the production during war that we moved out of, the bad economy. But it doesn't make a lot of sense if you really think about it. If gold is going to 800, where do you see Bitcoin going? We'll see. I've still got that possible target down there below 3,200. We've advanced so far. It seems less likely than more likely at the moment. But I think we're going to see if gold is to head on down there, there's no reason that Bitcoin shouldn't head down as well. Because at the end of the day, everything, Bitcoin included, is subject to the dollar movement. Anything, anything priced in dollars. So if the value of the dollar continues to increase, then anything denominated in dollars should decrease in value, all things held equal. A lot of people want to believe, oh, but it's this new paradigm and people are going to be in here because they can see the future of Bitcoin and it's going to $1 million and all that. But guys, the reality of it is, this big money that's in there, they aren't willing to take a risk like that. They aren't willing to hold Bitcoin that they bought at 40,000 as it gets to 15 or 10 or something like that. A lot of it's reporting requirements and whatnot. You have to report on the value of your company. If you're talking about company values here, guys, everybody's excited. Oh, Tesla's in and MicroStrategy's in and all this and all these other companies you can get in. But at the end of the day, it's not so easy, guys. It's not so simple. They can't just throw Bitcoin on the books and go, okay, there's it is. Because there are reporting requirements for public companies. And these often include the value of the company and debts they hold and stuff like that. And all these things together affect the value of the company. And that's important because if your company's dropping in value, then you have less maneuverability. You aren't as able to raise debt, to expand, or to do other things that you want to do. So think of it this way: if you're a company like MicroStrategy or Tesla, and you're getting all this, you're putting all this Bitcoin on your books, and Bitcoin starts dropping in value, excuse me, that's gonna hurt you. Not only is what your company worth going to decrease, which again affects you in those ways and so many others that I didn't talk about, but it also is going to discourage new investment in your company. So new shareholders not going to want to be in there. You're losing value. They're going to put their money at a company that's growing, not one that's shrinking. So, the company is losing on two fronts then. The value of their company just because of the value of Bitcoin dropping, and then the value of the company dropped because the shareholders are leaving. I mean, these are real things you have to think about if you're doing this with companies. And so even just the appearance of such a thing via reportings, it's a temporary pullback with Bitcoin, but your reporting requirements make your company look a lot weaker than what it is maybe. And so these people that are running these big companies, they have to think about these things because they have a commitment, legal commitment to their shareholders. As far as the value of the company goes. So, I mean, there's a whole bunch there. So, yeah, we'll see how it plays out there. Yeah, guys, by the way, thanks, Hank. He says he's reminding you that I said I think it's going to 800, not that it is going. Yeah, anything I say, there's never, guys, the one thing you have to understand is there are no guarantees in trading. This is why whether I'm doing live stream here or over in Discord, when I'm doing charts and whatnot, it's always this, okay, I think it may be going here, but these are the things you want to look at. If it gets past here, there's your first clue that it may be headed that way. If it gets past this point up here, that's going to add confidence to our account. But in no way does it guarantee that price will head wherever you think it's going to head. Nobody can guarantee you those things. Now, people are going to try because you guys are going to go pay for that online. You guys are going to think, oh, wow, somebody's telling me what I want to hear. They're going to guarantee me the price is going to go here, here, and here. Sometimes they're going to be right. Most of the time they're going to be wrong. But they're only going to let you know about the times they guaranteed and it went where they thought it was going to go. So you guys need to be careful with that. Don't waste money with somebody who's going to guarantee you the price is going to go up somewhere or go down somewhere. Look for somebody that tells you, okay, listen, here's why I think it's going to do this. Here's the case for that. But even so, here's where we need to see it getting through to start feeling more confident about this. And if it does actually do this other thing, though, then that means what we're looking at is completely not correct and it's invalidated. If whoever you're spending money with, guys, is not telling you these types of things, or whoever you're following online, you better think 2, 3, 50 times. Yeah, I went from 3 to 50 before listening to what they're saying. It's a really dangerous game you play when you start expecting, these guarantees and whatnot with your trading. Oscar, yes. As I mentioned last week, we're only doing streams twice a week now, public streams on Tuesdays and Fridays, but we're doing full market coverage both days. Yeah, so that's what we're doing now. Yeah. I don't know who you're talking to, Hank, but yeah, talking about Elon Musk influencing price movement with a tweet, and may that potentially come under securities regulations? It might. If you have the power to manipulate price, and it appears that you're using that power to do so, then yeah, you can pretty easily, I think, fall under some security laws violation, federal securities laws. It's not simply, I just think it's going to do this, I'm going to say it. No, because, government expects that if you are able to do a thing, that you're going to be responsible with it. As Spider-Man would say, as they'd say in Spider-Man, with great power comes great responsibility, right? But it's a very real thing. It's a very real thing. Again, I think there's a case that could be made if prosecutors wanted to bring Elon Musk to court and say, hey, listen, charge him and say, listen, he said this about price and immediately price did this. So he has control over price. He has this ability to pump it. And if he has that ability to pump it and he's speaking about it publicly on there, then, he has a different sort of responsibility now. And he's potentially, using that power he has to enrich himself at the expense of others. I mean, I think that's basically the way you'd start the case, kind of something like that. If you're trying to charge somebody with something like that. But, again, our securities laws are so complex. They're so integrated, it's not even been there. There's not been an overhaul in the last almost, I guess it's been about 90 years now, since the 1930s. With securities laws, they just continue to add more laws. They've got like this giant pot. Think of a giant pot you'd be cooking spaghetti in for like 50 people, right? And you just keep on throwing more and more stuff in there. I mean, that's basically our security laws. And so there's a lot of difficulty with the U.S. security laws today, and digital currencies and whatnot, cryptocurrencies, as well as what role does social media influence play? Because the spirit of the laws basically are that if you're in a position of power, you should not be using that power to enrich yourself and potentially hurt others. I mean, that's the essence of what all those laws come to. So if you can make a unique, new and novel argument there as far as social media influence and whatnot goes, I mean, I think you've got a good chance of the courts kind of going, whoa, you're in violation now. So, yeah. Oscar, glad to have it, man. Glad. Let's see here. Lewis Winthrop says, Elon's attempt at keeping Tesla ahead of the EV game with lots of money for R&D. Invest in crypto and pump it. Yeah. I mean, this is getting him greater return than he's made on those electric cars, that he's been pumping. And you have to remember, guys, you have to understand, Elon and Tesla would not be where it is today without government subsidies. Your tax dollars are paying for his wealth, guys. He gets enormous amount of credits for this whole EV thing, which, basically goes to his personal bottom line there, So, because it's exceedingly expensive to produce electric vehicles and electric vehicle technology and car batteries, that further those things. So, you have to understand that Elon's wealth right now it's pretty much completely a product of your tax dollars, of governments, of all the things the government is giving them, whether they're local, state, or federal government, all the little bonuses and things they're doing. So he does this. If he didn't have all that, guys, there's no way Tesla would even be a thing right now. Or if it was, you'd be paying, hundreds of thousands of dollars at least for a Tesla. At least. It's the reality of what we're doing right now, guys. But yeah, so different thing there. Oscar says that Elon could easily be charged with market manipulation in his country since crypto is defined as a security, and it's the same tax for stocks, etc. Even same form, just different page. Yeah. Let's see. Crypto Girl saying big money was in crypto, but Elon makes it very real to a lot of people. I don't think he was doing it to enrich himself. I think maybe he's helping the little guy. Oh, I don't think so. I really don't. In dealing with people that are in those positions throughout my life, at the end of the day, they're no different than you and me in that pretty much everything is driven by what can it get me. It's a very personal thing. They are okay with the little guy, with appearing to help the little guy as long as that really helps them. I can't say that he's not, that's not the thing, but, at the end of the day, $1.5 billion into crypto, I don't think he's really worried about the little guy. I think he's worried about making sure that continues to rise in value so he can make money. Now, so he can look like he's doing something good, making a good choice here rather than it go the other way, and potentially look pretty bad on him. We've talked about MicroStrategy before. For those of you that may not know, MicroStrategy's been around a bit. It's not the greatest company. There we go. So MicroStrategy, this was the dot-com bubble. They were one of the high flyers. MicroStrategy, look at this. Right here leading up to the end here. They were able to benefit off what happened there, right? A whole lot of similarity to what we're seeing right now. They also took one of the biggest hits of companies during that time that survived. This drop here from 33.45 down to, right there down to around $4 and some change there. Lost almost 100% of its value. There's not a whole lot of difference in what's happening right now with what appears to have happened then. And this has only happened because of the Bitcoin thing. This isn't the company doing well with what it does. In talking to people that actually use the software, it's very expensive. It's not very good compared to its competitors. Again, after here, it just kind of settled here and just kind of did this thing. Now all of a sudden it gets this pump. Are we going to see the same fate? Remember, in these large cycles, when we look at these large cycles here, or even these larger cycles here, what happens is at the top, your little guys and your big guys, pretty much everybody sees things the same way. Everybody is overly bullish. That's usually what happens. And so it's not good enough to say, oh, the big guys are in, so things have to continue going up, because that's always what happens in these major cycle tops. Big guys, the little guys, everybody's all in. The big guys are in because they're forced to be in, because the little guys keep getting all excited and supporting things a bit. So the big guys really, they have these expectations that people are invested in them, or or people are looking to invest in and whatnot, and so they need to continue to rise. So basically their hands are tied. They got to get in there and do it. Yeah. And then, you get the big crash. Everybody's overextended. Everybody's too far into it. So I don't know. We're going to see the same thing here. I think there's probably a good argument for it. It's interesting. Again, the company doesn't really do anything here for years and years and years. Doesn't really do anything. I mean, look at this. So you're looking at a company here which basically traded sideways from 2010 to 2020. This 10-year period right here. While the stock market we can just put in Dow Jones, is fine. Just to give you an idea of what I'm looking at here. Look at the difference. Look at what happened here. It went sideways while the stock market did this huge bit of thing here. Look at this. See what I'm saying? His company didn't do anything for the last 10 years when everybody else was making money. Their companies were growing because of QE. This should concern you. This seems like well, God, I need to do something here because we've been crapping the bed for the last decade now while everybody else has just been soaring above us. So we're just going to try this Bitcoin thing and get in there. Say what you guys need to say, but I'm telling you, if I'm looking at that, I'm going, man, what the heck? And then I'm looking back over here. Let's see here. It says, I think what Elon is doing with electric vehicles is good for humanity overall, but that doesn't mean he cares about individual people, kind of like Thanos. Well, the good thing about it is, here's the best part about it, guys. A lot of people mistakenly think that you have to be, that when you do things, they have to be for reasons other than your own personal reasons. Now, personally, with my, my formal education in philosophy, I don't happen to believe that people are that way. I think people do things because they get something out of it, whether that's the feeling that they get for doing it, whether that's recognition, whether that's money, whatever, there's something. But the good thing about it is it doesn't matter as long as they're doing it, right? So, Elon doesn't have to do this for everybody. He could do this because he just wants to look smart. He wants that recognition. He wants the money, whatever. He could do it for all those reasons because ultimately it's still going to be good, right? So I think it's the first thing a lot of people need to in general, kind of get off the whole way they think about things is, they think, oh, well, if they're not doing it because it's for the good of whatever they're doing for, then, they're bad people. No. I think it's great that we have this environment in the world where people can go out and they can have their own personal goals and reasons for doing things, and doing so actually ends up bettering society. Sure. And again, I'm not anything against, I don't have any real, issue with Elon or anything like that. I just wanted to bring out a realization of the fact that his company is based, he would never be where he is today with Tesla, or even, his other companies, Solar City and whatever, the rocket one, without government subsidies. They're precisely the reason he's around. And his reason for doing it, again, I don't know. None of us are going to know for sure. We know what he may tell us, but we don't know for sure, right? But it doesn't matter, really. He's found a way to use the system to get what he wants, which is making things better for us. So, okay. It is what it is until it isn't anymore, right? Those who created indoor plumbing and refrigerators and air conditioners and all these things, down here in Texas, especially with the air conditioners, we love it. We love that they did that. We don't even care why they did it, because it gets hot here in Texas. So yeah. Let's see. Ro Riley is saying that Tesla doesn't match 401k contribution, so it doesn't seem like Elon cares so much about the little guy. And then, of course, she said what she said a minute ago. Yeah, there's a lot of different ways to look at that. But I think when we get to this right here, I think, because Saylor, everybody's evangelizing Saylor. They're basically prophesizing him, They're making him into this great prophet, right? But the reality of it is, that's his company compared to what everybody else did. So as far as being a businessman goes, do we really argue that he's a great businessman if his company was flat for the last decade when every other company was reaching record levels? Stock market is reaching record levels. And the only reason it's popped out here is because he bought some Bitcoin. It's the only reason. So this becomes the Bitcoin thing becomes a way for him to save his company potentially. Which means what? It means that if Bitcoin does crap the bed and head the other way, his company's going down in just a ridiculous fire. And does he actually go out of business this time? Or does he at least get way back down here, lose all that value again, have to work it back up to just average again? But most people don't look at this. They just go, oh, look, he's saying all these great things that I want him to say about Bitcoin because they make me feel good, because they make me feel like I made the right choice in buying it when I don't understand what's going on in the markets. And that's a dangerous way to trade, guys. It's a dangerous way to do things with your money. And this is my only point. It's to get you, hopefully, to help wean you off of the crypto Twitter emotional bullish roller coaster that they put you guys on, and just think a bit so you're ready in case Bitcoin's not going to keep going up forever. And when it pulls back, a lot of people are going to lose a lot of money. They're going to lose a lot of money because they didn't get out when they should have, and because they kept buying the dips when they shouldn't have. Even if it's just a bit, a larger pullback. It doesn't have to be a complete reversal down below 3,100, but just even a large pullback to 20 or 10 or 7,500. If it were to get down that low. That's enough for a lot of people to lose a lot of money. And Saylor and the rest of these guys, it won't matter to them. What do they care? It's not their money. You guys have to protect yourselves. You can't expect that somebody else out there is going to protect you, especially those out there who are, talking really well about things, that you're involved in. Yes, that's exciting. Yes, you want it to happen. But at the end of the day, they don't care whether you lose money or not, because it's not their money. They have a goal. They have an agenda. Saylor's agenda is he needs Bitcoin to continue going up because he was going absolutely nowhere with, again, the importance here is the significant amount of QE that entered the market in 2010 and 11 up through, 2020 there. And everybody else, all these other companies are benefiting and reaching these new all-time highs and everything. And his company's sitting there on its rear end, doing nothing. This company's doing nothing for 10 years, guys. So, if, he gets lucky, if Bitcoin continues higher and continues to go up these large levels, he gets lucky is what he gets. But again, everybody's going to ignore what we're talking about right here and just say, oh, he's so smart. He's a great businessman. Is he really? Boom to this. To me, if I'm looking at this, I'm going, man, he said, man, I've got one chance here, and I hope to God Bitcoin works. That's the way I would read that chart. Just as somebody who's involved in business and, investing and whatnot for so many years, and the things that I know about, businesses and law and, all these different things that converge here with what we're doing. It's hard for me to say that this right here says he's a good businessman. And if I can't say that there, then I necessarily have to take the more negative of the approach here and say, man, he was gambling and hoping it went up. Because that's all he had to do. Because, again, he did absolutely nothing for 10 years here while everybody else rose to significant levels. All his competitors and everything kept on eating his lunch. Losing market share consistently. Overpriced, poorly working, software. From what I understand, from what I've been able to gain from people that have actually used it, as well as other things, the information that you find online from companies and whatnot. I mean, I don't know personally. I've never used his software myself, but it was sure as heck aligned with what we're seeing there. Can I comment on the various grayscale crypto trusts? Bitcoin, Ethereum, BCH, LTC, etc. might be a way for some people to get into cryptos without having to trade. Just your thoughts. Well, my thoughts are, as long as the market's going up, they're okay. But I really think that the big thing for it is the arbitrage play on the GBTC, on GBTC there, because you have people who come in and they don't have to pay that premium. So they automatically come in at a profit. They're buying in lower than what the price is. And as long as Bitcoin continues to go up, that price is going to continue to rise. They have to hold a minimum of 6 months because it's an SEC reporting company. So they can't just get in and sell right away. But they buy the Bitcoin. They buy Bitcoin from a private party or from the market. They trade it for shares of GBTC, which means they now bought into GBTC cheaper than where it's at. There's a premium, 10, 15, 20%. They're already in profit. 6 months later, they sell and they nag that profit, that arbitrage there. And maybe some more profit on that. And rinse and repeat. That's what's going on with GBTC, guys, just so you know. That's what's going on. And so the minute that arbitrage is gone, the minute it's no longer available, you won't see the money flowing into GBTC like you have been. Because those players, those wealthier individuals, hedge fund stuff like that, they have no reason anymore to get involved in it. Now, some people are going to get into it because, again, the smaller guys are going to get into it because, you can, you have the tax advantages if you're putting it like in your Roth or something like that, which is all great unless the price goes down. So I think when you're looking at those, they do fine as long as price is going up. And those vehicles provide you with good tax considerations. If you put it in your retirement account, if you open your GBTC account in your retirement account. But I think it comes down to what kind of time frame do you have? Are you 20 years old just getting started? Okay, I think that's great. Are you 45, 50 years old just putting it into GBTC? If there's a large, correction coming for Bitcoin, maybe not. You're literally buying the top. And then it takes however long it takes for it to go down and however long it takes for it to come back up just for you to break even. So these are all things that you guys definitely have to take into consideration before you get involved in ETFs and things similar to GBTC, which isn't an ETF, by the way, it's a trust. But ETFs the same way. If you're buying them at the top, even if you're buying them in your retirement account, that doesn't help you out any. And depending on how large the correction is coming in, if we've got something similar to Great Depression coming in, it could be, you could be buying now at the top, say in your stocks or something, in your retirement account, and it could be 20 or 30 years before price reaches these highs again. So again, if you're buying at the top at 40 years old or 50 years old, it might not be worth it, because by the time it just breaks back even, you're going to be 60, 70 years old. It's like dollar cost averaging. Dollar cost average is a great thing the younger you are. The older you are, the less of a great thing it becomes, because all of a sudden you're fighting this time thing. Dollar cost averaging works because of time. And the less time you have, the more you need to think about if dollar cost averaging is your way of should be your way of investing. It's not just a blind DCA works for everybody. It doesn't. Again, if you were to get in the stock market, say in the last 3 months, dollar cost averaging, right? And we've got some large depression-esque type thing happening, it does you no good. Yeah, you're going to dollar cost average as it drops if you've still got a job and you can afford to do so. Okay, fine. But that thing may be dropping for 3 years. Overall, you're lowering your entry, sure, but then it may take 10 years just to get back to your average entry before you're actually even making any money. And again, if you're 50 years old and doing that, I mean, all of a sudden you're 60 years old before you're just breaking even. 10 years of waste in terms of, you could have been profiting. So definitely some things to think about. Whether you guys are thinking about dollar cost averaging or whether you're thinking about your retirement accounts and adding things like GBTC or something like that. Because you have to, guys, you can't just blindly enter and just only think about the good and what you want to happen. You absolutely have to make it a point to think about what could go wrong. Otherwise, you're not even gambling. You're doing worse than gambling at that point. Uh-oh. Peter Schiff's tweeting now that he's not ruling out $100,000 Bitcoin, time to short. And a lot of people give Schiff a hard time because he makes a lot of noise, against Bitcoin. But at the end of the day, the reality of it is a lot of the more general stuff he mentions is very true, guys. People can't get onto Twitter and side with him on something he's actually saying without everybody telling him how stupid they think that the person is. But again, guys, it's amazing how sure of themselves, the less educated are in a subject matter, and how more cautious, the more educated in that subject matter you become, the more cautious you become. What do they say that quote that basically the fools are loud and boisterous while the wise are cautious? Something like that. Yeah, and so again, there was a lot of shorting going on with Tesla when they announced that they bought Bitcoin. So Tesla's share prices dropped pretty big. Right there at that point. So we'll see how things happen, guys. But you have to be real about it, guys. This idea that it's a new paradigm and things are different now, that's the same excuse that's been used for hundreds of years in the markets always. It's always different this time, yet it never is. Okay? So, don't be thinking about that. That's not going to do you any good. It's not going to help you out in any way. It's always possible that it is new and different. It's going to be better paradigm, all this kind of stuff. But that is so far on the other side of likeliness that that should be a secondary thought, not a first thought. But yet with retail traders, with Bitcoin, that's the first thought. Everybody's got them convinced everybody's going to go to Bitcoin. Bitcoin's so much better than the dollar. Well, what usually happens in these terms of when things happen like this in the world, usually the dollar comes back and smacks some people around. At the end of the day, it is the world's reserve currency. More debt in the world is owed is U.S. debt than anything else, which means you have to pay it with U.S. dollars. Taxes have to be paid with U.S. dollars. So U.S. dollar has a function, has a legal function. And that's something Bitcoin doesn't have. Everybody's like, oh, but it's going to do this. Well, maybe. It might do that. There's no guarantees. And even if it does do a thing that you're looking at it to do, it's not a requirement. So, when you try to compare the Bitcoin against the dollar in that way, I think you lose out quite a bit. And again, this isn't me being anti-Bitcoin or anything. This is me being realistic with you guys. At the end of the day, if you stood the dollar against the Bitcoin, no matter what's going on in the world, the dollar is required. There is a function for it. It exists for a reason. Bitcoin exists because of right now, speculation and the hope that it becomes these other things that people are talking about. But there are no guarantees, guys. Not at all. And again, the idea that Bitcoin's going to do all these things is so far removed from what typically happens that it has to absolutely be your secondary thought. And as long as it's your secondary thought, and what I'm talking about here, the other way is your first thought, then that means you're going to pay more attention to your risk management and you're going to be more protective of your trade. And that's what I hope for. I'm not telling you not to think it's going to go to 100 or 400,000 or whatever. I'm saying that have a plan if it doesn't. Understand why it may not. Because if you don't, again, you're just setting yourself up to lose. By the way, guys, I just was looking at this real quick for a count. I haven't ever actually counted this, but look at this here. We've got a 1, 2, and then we've got an A, B, or a 1, 2, 3, 4, 5. 3, 4, 5. If this is 5 down, this is necessarily only going to be, you know, a, I don't even know, I didn't count it here. Maybe an A, a B, let's see here. And you're going to have 5 down. If this is 5 down here, this is likely to be 3 and then 5 more. Does it mean it has to get below this level? Nah. It could just a little bit down there, but if it is, I'll have to go back and count this, really kind of look at it. But it looks like there's a good argument here for maybe a 1, 2, 3, 4, 5 here, maybe. We'll see. We'll see. Nonetheless, it's ran the monthly pivots. MicroStrategy has here above the R5. So generally we look at that as a termination point. So we'll see if we get a reversal off that now. If we join in here locally, just go and get rid of this other stuff. Let's see here. And if I look here right away, I could see maybe a 1, 2, 3, 4, 5 here. Let me see what we got going on here. Got a bit of bearish divergence over in that way. From this point down here, but it's got this point in the middle. Well, you know, it could push up higher here. We could get the daily R5 pivot a little bit higher up. This could be a consolidation for a wave 4 and then have a wave 5 push up. It's got to fill in the gap there. If you're dropping below this swing low, this is your major swing low here. At, let's see, that's 504.60. Yeah, 504.60 here. And so if you're dropping below that's a good sign that this top is probably in. Yeah, so there's some thoughts on, you know, what may be going on with that. I'd have to come back here and really count it out, though. But, yeah, if you're dropping down below that, it's pretty much the top there. It's coming back. Again, if this is a, you know, 5 down here, then this would likely be potentially a 3 up. It could be, you know, it could be a 5 up. This could be a 5 down as an end of a movement down, and then, you know, 5 up for the move up. But we definitely want to watch at the moment. I think people are way too sure about what's going to happen when they probably shouldn't be. We've got this channel resistance just above here, just a little bit higher. So yeah, I'd watch it if it does pop up a little bit higher, new local high there. I'd be drawing this line off this the top of this resistance here, this channel, and just watching that this area up here, potentially around 1500, depends on how long it would take to get up there, and just see what goes on there with that. Let's see here. Yeah. If you think Bitcoin is going up, then Grayscale should go up as well. Because basically Grayscale really, the value of Grayscale really is the value of Bitcoin plus the premium. So, yeah, if you think Bitcoin's going to go up, then, Grayscale would be, you should assume that Grayscale is going to go up as well. But, at the end of the day, it's still another market, so there are other factors that affect it. But beyond that, you have to remember that there is a 6-month holding period. So, heaven forbid, let's say you were to get in right here, right? And it was maybe to go up and then came back down. As it's going down and down. Next thing you know, 3 months in, you're down to 20 grand. 4 months in, you're down to 15 grand. 5 months in, you're down to 10 grand. If that was to happen, something like that, you have to hold. You can't get out of it for 6 months. You do have a 6-month hold period. So that's the other thing to consider. You would have to be really confident that the price is going to go up at least over the next 6 months till you have a chance to get out of it. But again, you are going to pay that premium to get in it too. So not only does it have to go up, but it has to go up above the premium that you paid to get in. So yeah. Bianca, have a great day. I appreciate you. But anyway, I'm going to get out of here, guys. It is 1 o'clock. I got to get going. So hopefully this kind of helps you guys think a little bit more about what's going on. Again, nowhere in here did I say Bitcoin's not going to go up or it's not worth it or anything like that. But I spent a lot of time discussing the realities of being in markets, the realities of being in Bitcoin, and how this may or may not affect what you're doing. And the goal here is just to get you guys to understand a little bit more, to think beyond your emotional bias, whatever it may be, so that way you can more intelligently protect yourself just in case price doesn't go how you expect it to go. I think again, it becomes really kind of dangerous to be in the market and not have a plan B. Y'all excited about plan B and his thoughts about where Bitcoin's going. What's your plan B if it doesn't? Make sure that you don't spend all this time in here only to come out with nothing. Okay? So anyway, there you go, guys. I'm going to get out of here. I've got to get going. It's after 1, but y'all have a great day. Thanks so much for joining in. As always, you guys can join us over here at howtotradetowin.com. Tier 3 is the place to be. Gets you absolutely everything. More content than you can absorb in a month. I'll tell you that right now. But enjoy it. Go in there. And if not, we'll see y'all on Friday at 11 a.m. Central Standard Time. We'll go through all this again and check out those markets, all right? You guys have a great day. Stay safe. Stay warm wherever you happen to be, especially if you're here in Texas. And looks like the power is doing all right here, so hopefully it'll stay on where you guys are at as well. You take care, everybody. Remember, the only thing you control in the market is how much you lose. That's it. It's absolutely the only thing you control. So it deserves the most of your attention, all right? Have a great day. Take care, everybody.